Yeah, hello and welcome to another update video about Bitcoin and Cardano. In this video, we're going to take a look at both charts, and overall we can see that the market is moving rather sideways. There was a bit of a move up today. Bitcoin was rejected. We're going to take a look at that. Overall, we are still in a correction in my view, but we can see today that there is a bit of a relief rally for some cryptos after Bitcoin's after the altcoin drop in the last couple of days, where some of the altcoins lost a lot in value, really a lot in value. So you can now see a little bit of a counter reaction, nothing too crazy. I think Terra Luna is leading the way here at the moment of the top altcoins. You can see that here with around 11%, a little bit higher than that even. We, funny enough, covered Terra Luna on Sunday in the membership live stream with a little bit of a talk about the fundamentals. Very interesting. So let's take a look at Bitcoin. Bitcoin is, in my view, still here in this wave C. Within the wave C, we are, in my view, already potentially in a wave 5. Yeah. So a wave C typically consists of 5 waves. Within this one here, you see the wave 3 here. We did the wave 4 here, and we could be in the wave 5. Now the wave 4 doesn't need to be over yet. So yeah, I need to remind you of that. What I charted on here also with this wave pattern 1, 2, 3, 4, 5, which is currently playing out. This, just because it's playing out now, doesn't mean it needs to continue like that. These very short-term wave patterns are very hard to, it's a daily noise basically. They are obviously very hard to sort of, forecast. Overall, what you can see just looking at the price action is that we are still very much on the corrective side of things here. So all of this move from the wave 3 to the wave 4, in my view, was really corrective. And as I said, that wave 4 doesn't need to be finished yet. You could maybe, I've got this charted as an A, B, C, but maybe, just maybe, what is possible is that you've got something like that. Yeah, so you've got your A, B, and the wave C is still coming. So we need to be aware of that. That is actually what I said here in the last few videos, that we could now see a little bit of a move upside. To be honest, that has already happened, that kind of a move to the upside. Let me just move that back. Has been rejected, however. So we're going to take a look at that in a minute. But yeah, the critical level here remains the 46.5K level. That is a very, very important level. If we break above the 46.5K level, then my alternative scenario will come into play, where Bitcoin could extend higher. Yeah, could move to higher price levels, maybe all the way up to 65K. In that case, what we would be looking at would be a wave B, yeah, within that wave that we are currently doing, and we would then get into this range here, in this price range between the 50% Fibonacci retracement level from the beginning of that wave to the downside and the end of the wave to the downside. Could go all the way up to, yeah, the 88.7% Fib level. That would be a realistic range, and we would then need to see how the price is reacting to each of these Fibonacci retracement levels when we get to it. But this would be the scope of the price range that the price could be getting to with the highest probability, yeah, if the 46.5K level gets broken. That is a very important level. That is the maximum this wave 4 could do in this scenario. If it breaks above that, my view is it's not a wave 4 anymore. It would then be something different and could also unlock higher prices. But as I said before, we haven't broken the 46.5K level yet. And therefore we talk about a different scenario, which would here be this move to the downside. As I said, it doesn't need to play out like that. This is currently what I can see here. It is also possible that we move a little bit higher than that. Even in this orange wave 4, that would be a possibility, but in this scenario that I've charted on here, we are not allowed to break above 41.5K, because then this wave 4 would come again too high and it would unlock higher prices within this descending downtrend scenario. And it would be more likely then again that we even break above that 46.5K level. Now that hasn't happened yet. At the moment, yeah, we could still see this play out like that. As I said before, the 41.5K level is a very important level. And the other level that I've been watching today was here this descending trend line that you could see coming down here, where the price could have got all the way up to 39.8K to approach resistance, but we even found resistance a little bit before that. The price did nearly get there. We came all the way up to 39.3, didn't quite get to that point. That was the resistance level that I talked about. Well, actually, if we move that a little bit higher, that would probably have been more accurate. Yeah, well, 39.9 or something, depending on how you draw the trend line anyway. I don't really want to cut through that, so depending on how you draw it, it might, in this scenario, it even has hit the resistance, right? So that was what we talked about, that the price could break out of this descending broadening wedge, approach the next resistance, and then obviously we need to take it from there, see how the price is reacting to this resistance. Obviously, it was rejected quite strongly, actually. And it seems to be a fake out currently of this broadening descending wedge, which doesn't mean it couldn't move up again from here. What I told you in the probably last couple of videos was that I do expect a little bit of an upside. We were then down here at 36.5, that we can expect now a little bit of upside because the indicators would support it. So some of the indicators were turning green, were turning a little bit bullish. Yeah, still everything within this correction. And to be honest, we saw that play out so far. It did break out of this descending broadening wedge and we approached the next resistance. So we had a move up from around 36.5 to 39.4. Yeah, so quite a bit of an upside, but everything still within my expectation that we are going down lower. I would have imagined that the price could also push higher than this a little bit, maybe all the way up to the 50-day moving average, currently at around 40.8K. Or here even to that 41.5K level. But at that point, if it moves higher than that, the descending scenario, at least this imminent one, would have been validated. Now, what we can see, it hit resistance and is already moving down. And what is interesting is that this candle here is quite big. Yeah, it's quite a strong candle. You can see that. And we're heading further back into this descending broadening wedge. And if this continues, the next support would be, in my view, I mean, we've got the previous low here at 36.5. But it could even drop down to the support line of this descending broadening wedge at 35.3K. Yeah, maybe I need to even move it a little bit lower because the last support was a bit lower. So probably like that, it would be, yeah, near enough, 35K. 35K would be the next support if that move down here continues. Overall, you know, anything that happens here within this possibly still being the way forward, but anything that still happens in this scenario, in this sort of range we are in, it doesn't really matter in the grand scheme of things because I still do expect that we are in a correction. And I still expect we need to get into this lower price range. And that is a completely normal correction. I know people always try to find reasons for it. Obviously, we've got some conflict going on in the world, but this is it is just what charts do. It's what charts do. People always try to look for reasons. Just look at some stocks and shares which have been dropping for a year now. An example is, for example, PayPal. A year ago, you didn't know anything about the conflict, right? And these things here are always catalysts. Yeah, they are always catalysts. They can move a market faster into a certain direction. But for example, had Bitcoin already been in a very, very strong bull market, my view is, and I'm convinced about this, that something like a war or a conflict or an invasion or something like that would not have such an effect on the market. It cannot, because we would then be not in a descending, in a bearish scenario already, not if you have a run to the upside. The market couldn't do it. The market would not do it. I know that's a bit of a different view on the market as many people have it, but you need to bear in mind that everything is already priced into the charts. Any kind of fundamental analysis that you do is, in my view, either incomplete or any fundamentals are already in the charts because the market has already priced it in. Yeah, that is how the market works. That's how prices work. That's how the charts work. It's far too efficient. Everything is already priced in. Do we really think the market moves without taking into consideration any fundamentals, for example, of a cryptocurrency? Doesn't work. So for me, the point of doing a fundamental analysis is it kind of makes sense, but it is not too relevant for the chart analysis and to understand where markets move. Okay, so yeah, you don't maybe in the long run, right? Of course, if you have a project which is scam, there's obviously something different. But if you have a solid project, that's obviously what you need to understand. But if you have a solid project, then the chart analysis and especially the Elliott Wave analysis is is king for me, right? So what could be happening here, and you can see it on the chart already, that's interesting. You could get, and that's pure speculation in this case, you could see here something like a head and shoulders playing out, right? So to get these head and shoulders, we now need to move lower, and you could then maybe define even here a neckline of this head and shoulders, depending on how you want to draw it. Let me take out this line again. So a bit of a head and shoulders going on here. Maybe like that would be a way to do it, where you then get a neckline of around, 36.5K. If we drop below that, then, and if we take a look at the target of that head and shoulders, that would take us down into my price range. So really waiting here for the next impulsive move down. But to do that, as I said, the prices or the indicators need to turn a little bit higher, but what we can already see, they did that obviously from down here, from the oversold range, moved up higher, found resistance in the bearish range at the 50 line of the RSI on the 4-hour chart, and is now already dropping. The 4-hour MACD is already also dropping again to the downside. Let's take a look how the daily is actually looking like, still pointing further down. The thing is, we're here at a level of 38, so how much lower can the price actually drop with a RSI that is already quite low? That is why I said I think we could move a little bit higher than from this, but in the end it doesn't really matter in the grand scheme of things. If you move a little bit higher, maybe to 41.5, then get rejected and then move down, or if you move down straight away. Personally, I would prefer a move down straight away. It would just be faster, would be easier, wouldn't take that long. And as we talk, we already moved down lower, but we need to drop below that 36.5K level in the first place, and then watch the 35K level as support, which is here the support line within this broadening descending wedge that we've got on the chart here. So these are the key levels at the moment. Overall still in a downtrend. Overall, of course, still in a downtrend. And let me take a look at ADA as well. So let's take a look at ADA. Not the Coinbase chart. Want to take a look at the Binance chart. Key tipping point here at the moment. The market is currently dropping again, as we said. So what has happened here? The ADA chart, if I zoom out, you can see that ADA is still in this descending channel. You can see that. Still no sign of a completion of the correction, because we dropped below certain key support levels. We talked about that. We dropped below the 61.8% FIB level at roughly 95 cents. We dropped below the 92-cent support level. I think the next logical level where ADA just needs to get to, and that would be very much in line with my primary expectation for Bitcoin dropping below the 29K level, we can expect ADA then also to drop here into the region between 55 and 30 cents. Yeah, that is how I would expect ADA now to play out, because it is just not slowing down. The downtrend is still in the descending channel. It has dropped obviously below key support levels. It has now moved back again into this descending wedge after a little bit of a fake out to the downside. But again, you see these long wicks to the upside, indicating, right, it was rejected at $1.02. By the way, $1.02, no, it wasn't rejected at $1.02. It was rejected at 96 cents. That is the 0.618 FIB level. Okay, so was rejected there, is now again at support. If it loses that again, and that is the 89-cent level, then it will drop, in my view, again here to the 80 cents, where we had, oh, it's not 80, it's actually here where we had support before. This would be here, that one at 82 cents. Yeah, that is where the price would then go. And yeah, from there, if it breaks that, I think we can go fairly quickly down to the 55 cents. Looking at the indicators here, we can see, let me go to the daily chart. We can still see here downside potential, but again, that is why I think we could see a little bit of upside, again, as I said, for Bitcoin, because the indicators are just so low. Again, when it was the last time at this level, we saw a move here from around $1.20 to $1.60, because it was just oversold. So I had a bit of a peak to the upside. And now we need to see if the price can actually do that. My view is it could, especially as the daily MACD is already turning around here. At least we see the first light red bar on the MACD histogram. And after being so much oversold or so much to the downside, I think the market has certainly the possibility to move higher than this. Yeah, again, once more. but overall clearly still in a downtrend. And I'm looking at my target areas. Any sort of short-term daily noise here should not surprise us. It's how the crypto market moves. It's just the daily volatility. So we're looking here at the key support level. If that gets broken at 81 cents, then I think we're going to get fairly quickly into my target area. And for Bitcoin, the key support level here is 35K at the moment. If that breaks, this is the descending broadening wedge support. If that breaks, 33, and if that breaks, then we can get fairly quickly also here in the target area. Yeah, overall still everything very, very corrective. The little bit of a move up that we saw, maybe that's already finished. We need to just see how it's playing out now, but I think we are still continuing to move down. What we need to avoid to stay in this primary scenario here is to stay below 41.5K for Bitcoin, and even if it makes this move above that, the price should stay above 46.5, because if it moves above that, we will see a extensive extension of this whole correction that will just take much longer until we then see new all-time highs. All right, that's my view here on Bitcoin and Cardano. Hopefully you liked the update. If you did, please smash the like button and subscribe. And if you really like the content and also want access to Telegram live chat, Discord server with buy and sell orders, my own buy and sell orders, with lots of additional content, right? Forecasts and so on. And also maybe a weekly live stream. And for gold members now also stocks and shares analysis on Discord. Then check out the channel membership option. You can find the link for that in the description. Takes you to my website where you can sign up to the membership. Thanks a lot for watching and see you in the next video. Bye bye.